Hello and welcome everyone to the ATC's third podcast. My name is David Torres. I want to talk about some upcoming content that's going to be coming on the YouTube channels. So I'm going to be doing a lot more trade breakdown videos. If you saw last night, I posted one on NIO. So if you haven't watched that, feel free to check that out. I'm going to be doing a lot more league class content, a weekly podcast series. I'm also going to be doing a coaching session with Rich. So it's going to be like a 1 hour lesson between me and Rich. It's gonna be once or twice a month, and then that's gonna be posted to YouTube, so you guys can really see the state of where I'm at and the lessons that Rich is providing for me. So that'll be valuable to you guys. And then I also want to dive into some new YouTube content. So maybe trade of the week, talking with other members, maybe some swing trade setups, maybe some long-term trade setups, just a new type of series. And I'm open to recommendations on that, but want to dive into some new YouTube content. And then also quality production. I really want to take a jump on that within this new year. So those are kind of the list of things that I really have in mind for the upcoming, pretty much end of this year and the upcoming year. So this podcast is going to be a little different. Rich is out of town, so I ended up wanting to bring one of the students that I ended up joining with initially a few years back. We went through courses together and we were kind of at the same pace. So we really related a lot. So I think we're a few years into our trading journey. So I really wanted to bring a guest on that I feel like a lot of new students can relate to. So it's my pleasure to introduce Derek Patterson.
David, how you doing, man?
Wonderful. How are you?
I'm doing good. Just trying to take on everything going on in the market and trying to really evaluate, kind of what's the next big move and, how can I capitalize on the opportunities at hand. But it's been really good, here in Dallas, Texas. Weather's been really nice.
Gotcha. I'm really excited to have this podcast with you. I feel like this has been something we've talked about for so long.
I know. And we met probably like 3 years ago, and we kind of started right at the same time. And it's been so fun just like watch our journeys progress. I remember we sat there in Miami, there at that onsite, and we were sitting there talking, and we kind of had a heart to heart. We're like, no matter what, we're going to fucking figure this shit out. Like we're going to make it. And now here we are, and we're so far advanced for that. And it's just amazing to see that journey.
Oh man, just reflecting on where we were at that moment. I can just remember vividly, just like understanding. I didn't really have the proper understanding of the tape that I do now. It's been a long journey so far. I think that really helped, like, transitions into one of the questions that I wanted to ask you is, if you could go back to that Derek that just started those courses 3 years ago, about learning this tape reading methodology and following smart money, what advice would you give your beginner self?
Oh, that's a good question. I think that there's a couple things right off the top of my head that really strike me as if I could go back to tell myself. And the first thing is, you have to mentally tell yourself that this is what you're going to do. Because if you don't define in your head that you're going to be a trader and that you're going to figure this out, you're ultimately going to fail, because you don't have that conviction inside of you that you're willing to do whatever it takes to make it. As we both know, in the very beginning, it takes hours and hours of work and researching and watching videos, recording your trades, and journaling, until things start clicking. And it can be kind of intimidating, and it can be exhausting. And you just have to tell yourself mentally that I don't care if this takes me 4 years or 10 years, I'm going to figure this out. And I think that was kind of one of the biggest transitions for me. That was kind of the turning point in which I just kind of was just making trades, showing up, goofing off, and just, making $100 here, $200 there, losing a couple hundred, and just kind of screwing off to the point where it's just like, you know what, this is going to be my future, and this is going to be my career. And that's really when I started taking it really seriously. And because I told myself I'm going to be a trader, I made it very professional. And so that's just kind of something that took over time. I think the second thing is fall in love with the process. I mean, so many people get caught up into making, those $5,000, $10,000. I mean, your first $10,000 day, it's exciting. You look there and you just look at your screen, but really that doesn't matter. You have to fall in love with the process. And it's more about the process of learning how to trade that's fun than it is making money. And it's not until you have that mindset that you'll be successful. If you're always chasing money and you're chasing, just trying to get rich and make as much money as you can, you will lose all the money that you put into this market. And it's a shame because so many people get so caught up into the money aspect of trading. At the end of the day, that's why we trade, but you have to fall in love with the process. So I'd go back and tell myself to fall in love with the process. And lastly, no matter how much money you lose, no matter how long it takes for you to figure this out, once this stuff starts clicking, I don't care if you lose 100,000, 50,000, $1 million, that money will be insignificant to what you potentially will make once this stuff starts clicking. It's like a college education, and to not get so caught up in the losses that you become frustrated with it. Use that frustration as a sense to figure out why you lost, what went wrong in that trade, and channel that energy differently. And so those are kind of the three things that I would really like to go back and tell myself, but I think that there's value in having to go through those lessons and failures so much over time that I was able to pick this up, because I mean, a lot of these mistakes and stupid mistakes I'd make all the time. I used to sit there, and I remember, Rich would always talking about, cutting your losers. And I would make, 3 trades, and on each trade I would make, I'd make a quarter, I'd make 60 cents, and then I'd make like 50 cents, so I was up $1.50. And then middle of the day, here I go, I make a trade and I'm down $2. So not only did I give everything back that I made, now I'm down for the day. And, it's just little things like that. But I think those lessons are very valuable. And it's just about reflecting on what went wrong, journaling it so you don't repeat that.
There's so many obstacles to overcome when it comes to trading. I feel like, all right, this is the methodology, and learning the methodology is your first step. But once you do that, it's really sticking to it, your psychology, just your mindset in general, which is, I feel like that comes a little bit later. At least it did for me. I was so into being so precise with this methodology and understanding the tape. What's the market makers doing? What are their intentions? How much money do they need to make? What's my entry? What's my stop loss? And I was just so structured on methodology, and I had no grasp on my psychology. And that's something that, as I progressed, it kind of, you get put against a corner, and it's either you progress your psychology or you stay in the same place. And I think the biggest key that, in terms of going back and where I was when I started, was just be more focused on that psychology aspect and be more mindful of that. Is kind of like, I guess, just summarizes that whole like beginner phase for me.
Yeah, I think my biggest challenges still to this day are really, really understanding the personality of the day. And it's more a technical challenge. I'm to the point now where I can read stocks, I can understand the tape, I know what's going on, but it's translating that and really understanding, like, okay, I know that this stock needs to go above $50. There's buying at 50, it's trading at 46. And a lot of times it's just these mental stops in my head that are holding me back from a technical standpoint of, I still get shaked out a lot. I still get scared whenever I see certain things, even though I know better. And I think it's just things that overcome with time, but it's just things that I still struggle with. I think, there's so much to evaluate that I think sometimes I can over evaluate something to the point that I see something in the tape, I see something in the market, and I almost create my own bias of a move. And I don't necessarily all the time do the best job of saying, hey, I know this has to happen, but it's not now. And I still try to force things, which is unfortunate. I've been doing this for a long time, and I just sometimes I just try to push too hard and force a trade, and it ends up costing me, sadly. So I think, the psychology aspect was one of the biggest things to overcome. I remember there'd be times where, I would have a really bad day, and I would call people and I'd be like, I'm going to quit trading. This is done. And, it would just wreck me to have a down day, to take big losses. And now it's, I'll take a big loss and it's just on to the next trade. But, it's just the psychological aspect of taking all the information, all the variables at hand, and then to execute that in a timely manner, to remember everything that you need to remember to make a high percentage trade, is definitely, a big challenge for me. So it's a combination of some technical things, of some psychological things that are still kind of holding me back, that I'm trying to work through.
Right. And psychology as a whole, I mean, that's a whole another world other than outside the tape, right? So
Yeah, actually, if you dig into, just to talk about psychology for a second, one of the best things I did for my trading was, about a year ago, I started seeing a therapist. And, I had, some personal stuff going on that was affecting my trading. And so I went to go figure that stuff out, to not bring those emotions to the market. And then along the way, as I started working on those emotions, I actually started taking trades to my therapist and just breaking it down with him, saying like, hey, I was feeling these emotions as I took this trade. And he really, really helped me uncover, just some basic psychological things and some tricks around fear and FOMO and greed, to really help break those walls down, to eliminate that from my psychology when I'm in the market. And so I can be as unbiased as possible. Something I think for me was just a huge, huge upgrade in my overall trading.
Right. It's because you can have the greatest methodology, but those factors of really being able to be an internal observer of your emotions and understand, okay, I was looking at this sock setup and the prince told me this and I knew what I had to do, but I missed an entry, right? And those emotions that kick in of missing the entry, and you could chase that stock and end up, taking the lower half of the trade that's a little more choppy, right? I think that aspect of the psychological emotions plays such a key role into having a sound methodology. I don't think a lot of schools, I mean, Rich focuses a lot on psychology, but that whole just personal psychology of yourself, that's just not taught with many programs. That's something that's self-discovery within the market, and self-discovery as a tape reader. And I think a lot of that comes with understanding probabilities as well. I think ever since I started understanding of thinking in probabilities, it's helped a lot with my psychology. And I know just in the beginning, that's just impossible to do. I mean, I would look at the tape. I think it's a blessing and a curse within the tape, is you can see the print and know what the market maker needs to do, but the rest of the setup says otherwise. You can have aspirants at a level and understand that the stock needs to pull back, but the personality, the fact that they've already built before, volume setups, and just off-level prints in general, and it says completely otherwise. And I think that was my biggest mistake early on, was not even identifying those other factors that add to of thinking of probabilities, add probability to the trade. I would solely look at the prints and look at 60%. And it's the curse of tape reading, is just knowing what needs to happen and forcing that action instead of allowing it to occur. That is I can't emphasize that enough for new people, is yes, the prints, they tell you what needs to happen and what will occur, but is this setup allowing you to be able to take that trade? Is it becoming a high percentage setup? And I think just that is what I would really emphasize in the beginning of a newbie trader within learning the tape.
Dave, I've got a question. Whenever you're in the market and you kind of feel like, hey, you're getting a little emotional, things are, you're not feeling clear-headed. How do you overcome that? Or like, how do you handle bouts wherever you're having a bad day, or you're kind of overthinking things? How do you process that in real time?
Well, I've gotten to the point in my trading where my breakdowns, just from studying under Rich, they're phenomenal. The structure of my breakdown, the percentage of the trades are up there, right? I don't take anything under like 70%. So my percentages are there. My reads are there. I know what stock needs to do based upon the market makers and what they're telling me. I know to read the setups, everything to do that's so technical within this methodology, I have down, and I can reiterate so quickly to myself out loud while I'm in the market. It just depends on my emotions and state of emotions. And one thing I've been doing in this past year is I have a note. It says, become the internal observer of your emotions. I try to step away from my emotions. I don't try to rid my emotions. I think it's a big one. Is people are like, okay, I need to get away from my emotions. No, I let my emotions indicate and tell me how I should be approaching the setup. Because if I'm nervous, I'm fearful, um, I've already taken many shakes. I think with me is if I've taken 2 losses, I'm more willing to take more risk, even if the setup doesn't indicate so. So that's just my personal psychology. Is just whenever I'm on having a down day or I'm kind of behind, I got shaked out twice, I'm more willing and open to take more risk to be able to recuperate those losses, right? But that's nothing to do with the market and what the market's telling me. That's me. That's my internal. That's what happens when it comes with that fear and that anxiety of being down. That's just within me. So I've started to really analyze and know, okay, these emotions indicate this, and this is what I tend to do within this state of mind. So when I become fearful, I end up taking my thought process away from the tape and the market and thinking in terms of a game plan and planning logically, and I end up becoming, okay, I need to make this back, and I'm looking at price action. I'm taking trades that I go back in my journal and I'm like, why would you ever even take that? There's nothing there. You're not looking at any substance within the tape, and you're just taking price action because you're down on 2 trades. And that was, again, that was a transition of kind of the newbie Dave to the Dave that's trading now. So I think becoming an internal observer of your emotions and understanding what those emotions mean. Like, I think yesterday I missed an entry, and then I was moving my entry down lower, and I was like, this is an emotional reaction because I missed the proper entry. Like, this has become a lot less thinking in terms of probabilities. It's a lot lower percentage of a trade now than it was when that initial trigger occurred. And then I ended up not taking it, and I would have ended up being shaken out if I would have taken it. So just becoming the internal observer of your emotions, tracking what they tend to do to your trading, and once you feel them occur, then just taking that step back. I think I've saved more money by doing that than anything else, honestly.
Just taking a step back and
yeah, I mean, what it is just become the internal observer. It's just you almost separate yourself from your emotions. Really, it's just these emotions are pieces of information, and they're telling me how I should approach the market.
Put the mouse away. It's something that's said in the chat a lot, which is
right.
It's so true. Just put your mouse away. Just that way you can't click anything.
Yeah. So that's kind of, I guess, my approach to that. But I have a question for you as well. What was your biggest challenge when it came to learning the tape, just the tape specifically?
The biggest challenge into learning just the tape specifically.
Yeah.
Oh, it was.
Well, let's break down how we view the tape, right, to the viewers. Okay. So we have 2 time and sells. One is divided by 100 and the other is non-filtered. So we can see large orders and we can see all the orders. And the large orders we use to be able to identify smart money and large money. And then obviously the non-filtered is just regular speed and it's just flowing. So that's we have 2 time and sells, and then we set up our game plan based upon the prints at the controlling levels. And that's just a real quick summary, but go ahead, Derek.
Okay, so what was the most difficult thing just in the tape to learn? So for me, it actually became really easy up front to understand, like, okay, a stock gets major buying at a level, it needs to pull back because the market maker needs to build a position and needs to get shares before they go make money. And that all made a lot of sense. What became really difficult was in the moment, understanding all the information in between, which really helps evaluate and reflect, what's going to be the timing of this trade, and to understand, okay, if a stock gets buying at $36 and the prints come in and you say you get 8 prints on a stock and you're like, okay, this is going above 36. I'm expecting it to pull back. If it pulls back to 35.25, 35.30, somewhere around there, and it triggers, I'm going to take it. And that's kind of how I traded for a long time, was just when stock would pull back, I would just kind of hang out and I would see a ton of volume and it would trigger back towards that. And I would just get in and just kind of hold it until it went back above to where to go. And it was really just like kind of basic. And a lot of times I think I was just getting lucky. But the whenever you're in a stock and managing a trade, and you're processing all the information of being able to value, like, okay, I see selling, but is it selling because the stock is not going up anymore, or is it just somebody taking off exposure? And really being able to identify and see, hey, there's a ton of selling here, but it nowhere overcomes the amount of buying that we see. And being able to say, hey, I know that you're selling a little bit. I'm going to take off some of exposure, but I'm not just going to let that scare me and get out of my position. And it's really evaluating um, every piece of information and what is not important as well. There's millions and millions of orders and shares out there, and if you try to comprehend every single one, you're going to go crazy. And so it was just as relevant to process of what's not important, what not to pay attention to, as what is. So I think that was really that took a long time for me to understand. And a lot of what I did was just, I would record trades and just go back and just have to slowly, watch it. And just as the tape went and my recording, just kind of go at my own speed and process like what happened in the tape and what happened in the chart and the prints and everything. I think in classes, what Rich teaches that's so profound is he does this lesson that's, you would think you're crazy if you never knew what was going on, but he'll go in class and he'll just take the chart away. He will take the chart off the screen and you're like, what the hell is going on? What's going on here? Well, as he takes the chart off, we're sitting there and the stock's trading, and all you are doing is paying attention to those prints, and you're evaluating, what's important, what's not important. And I think that is a great way to really understand, what's going on in the market, so you don't get caught up trading in the chart. So I think that was huge. And the second thing was using the order book and the matrix to see the conviction and to see different levels and how they'll play out as magnets. And it takes a while to, I think it takes a while to develop the eye to see, how orders are being hit. Because if somebody's putting out an order on the ask at a major level and you see 150,000 shares and it keeps going to that level, but you don't see that order in the tape, you really have to be able to, in rapid time, be able to say like, hey, there's an order out there, but it's not getting taken out. What does that tell me? And that is, I think that's something that comes with a higher level, that comes with time. But that was so complex to me, and it took me so long to really understand, how can I use this matrix, that's such an important tool, to really understand the intent and conviction of the market participants on the other side of the trades.
Yeah, I think the easiest thing first is really just finding those prints, just seeing the prints, right? When you're first starting off, you're like, okay, what does a burst look like? What do the ask and what do the bids look like? That's the easiest part. It's just being able to recognize the print at the level. I think the more difficult part is really understanding the surroundings of those prints, because what are your reaction prints? What's the flow above or below? And if the tape moves in phases, right? So the market maker shows his intentions, and we can set up a game plan from those intentions, and that's just the clear-cut easy part. But the more difficult part is timing, dialing the timing, being able to see which type of prints correlate to timing and what type of prints say build. I think that's more or less the easier part. But in terms of like looking at the matrix, that's one of the kind of last pieces that a lot of people get. You see if orders are fully taken out or they're not, or oftentimes when I look at the matrix, I'm really just looking for, you end up spending so much more time looking at the tape in the matrix than the chart as you progress as a trader. I think when I first started, it was just really, okay, prints, looking at the chart, looking for an entry, prints, looking at the chart, looking for an entry. But now it's just like, okay, I can see some specific type of prints, and I can be like, okay, these prints indicate that they're going to break this level, and I can see that there's order on the matrix that's not going to allow this level to break without this much volume. So I can see, okay, these prints indicate the selling indicates that this level can be broken, and oftentimes the selling comes before the price action, so I can prepare for that price action. And just looking at the specific type of prints, you're just so much more in depth of what's going to occur in the chart. It's so weird because you think like looking at the chart, you get a better realization of when something's going to occur, but it's really keeping your eye focused on the tape, and that'll tell you when the chart's going to allow for that specific movement.
Yeah, it's really complex, and it's I think because it's so complex, that's why so many traders don't use it on their screen, and like Rich talks about all the time, so many traders, every single trader in the world has a chart on their screen. If anybody's watching the stock market, they're looking at a chart. They're not looking at, the market depth. They're not looking at time and sales. I think only a few percentage of people understand, and even know what it is. I mean, there's so many people I talk to out there that are just like, what is all that? And they look, and if they ever come over to my house and see my setup, they're just like, what is all that? They're only used to seeing a chart. But the information in the matrix, in the time and sales, it's what creates the chart. It is what makes the chart. It's like, you got to prepare everything in the kitchen before you can make bread. And so that's what comes together, and you see that come together, and that's what creates a chart.
Yeah.
But it's really
those ingredients are pretty much the phases of what's going to occur.
Yeah, I agree.
So I guess that's like my perception of how the market or the tape has changed. In the beginning was just clear cut throat. It was like seeing these prints need to pull back, seeing these prints, they need to make money. And I think that beginning, your vision is just so enclosed on those prints at the level, and then that needing to make money. But you could have ass prints at 34 on an uptrend on something, and then the reaction above just be a flood of sell, and reaction under just being a flood of sell. So kind of bringing back to that retail perspective, it was like they don't understand what the substance behind it is, which is crazy to me now that I'm at the stage I am. Seeing like maybe a trader trades a breakout, and that breakout could have nothing but selling in it, that the market maker's intentions could be just to solely sell off on them. And we see it often. And just to trade price action and momentum alone, like that is, it's almost scary to me at this point, to be honest. I mean, at the end of the day, there's not many of us that are able to read the tape like this. And I mean, there's obviously ATC and the students within it that Rich teaches that have a great understanding of it. But I mean, the population of us is so minimal relative to the retail that just trades those indicators, those breakouts, these, I don't know the indicators they use nowadays, but it's almost scary to me. They don't know the substance behind what they're trading.
Yeah, it is. It's hype, it's news. It's like, oh, this stock is coming up to an all-time high, I'm going to buy it. It's just like, really, like, it's almost like, well, what the hell does all that mean? Why? Like, okay, yeah, it's coming to an all-time high, but why? Like, what's behind it? Like, what's supporting that all-time high? And it's just is mind-boggling, and how much it takes to really understand what goes on to be able to really execute day in and day out. A lot of people, I think that they get on Instagram and social media and see all these like traders who are just, posting profits, and it's like, oh, they're just making money on Robinhood. And, I followed a lot of those people, and it seems like they come and they go. They're there, they're hot for a year, and then they're gone. They're not posting any more profits anymore. They don't run a chat room. And it's because that's not sustainable. But, you come to somebody like Rich, it's and you learn how the substance and how the trade develops, and where the orders are derived. That's something it's sustainable, because it's, people have been trading the same way for hundreds of years, and it's never going to change. It's all supply and demand and money flow. And until you can understand that, you won't be able to do this long term. I think
that's all we focus on, right? Is supply and demand.
Yeah. And I think that's just the only way you can trade. And there's a lot of different ways to trade, but it all comes back to those things, and how you make decisions is reflective of that, as a day trader, at least in terms of how you speculate and how you take orders and execute on that. I think one last thing that really, really helps drive my thought process is whenever I see an order, I used to just see numbers and I just used to see buying and selling, which I think is great. But I was taught by Rich that imagine whoever's on the other side of that trade, what are they doing? And if you see an order that comes through and it's 700,000, a million shares in just one order, I imagine somebody that's sitting on the 70th floor of Goldman Sachs, has a team of 85 traders beneath them, and they love their lifestyle. They're making, 8-9 figures a year, and they will not lose that job. And so whenever somebody puts on that size, you say, not only can that person not lose money, if they do lose money, they will lose their job and never have a job again kind of trade. And it's understanding that, hey, sure that a lot of orders are processed through computers and high frequency trading. Those are all programmed by human beings, and understanding the psychology of every order out there is triggered by a human at some point. And once you can understand that and picture the why behind buying and selling and the person on the other side, I think it can really help you develop trades and really be able to process, holding on to trades longer, continuously keeping, a trade where you're taking on exposure, you're taking off exposure, because you're reading in depth and you're understanding there's a person on their side. And that was like probably the biggest change for me, is like my thought process of how the tape works. It's like, it's not just numbers on a screen and orders. Sure, that's what it is and what's being executed, but there's somebody on the other side that's making decision, and I'm trying to get in their head. I want to understand what they're thinking so I can make money off that.
Right. And I feel like that's the misconception, is people perceive the market as data. Like, this tape is data. People are like, okay, look at all this data. How do we plot this data? What does it mean? And they're all data oriented. How do we use this? It's just the misconception of the tape is it's all data. But here at ATC, we look at it as a story. It's a book. It's someone that is controlling the stock, and we can analyze their intentions based upon the tape and what they show us. So we look at it as more of a story. We look at it as someone who we're following. We look at it as someone who's controlling it, and someone who's needs to make money on their position, or else they don't have a position, they don't have a job. I mean, this is how the market works. These people control the market. So it's not just data, it's a story. And I think that's a big key that Rich hits in all of our courses.
Right. Yeah, I think that's just, it's really profound and different way to think about things that nobody really talks about.
So let's just do one last little question here. Is I want to know, and I've been meaning to ask you, is what area are you working on to improve your trading at your current stage?
I'm really focusing on, so there's a couple things. I'm really working on sizing up. I want to size up and get my share count to above to where I'm at now. I want to get to that 30,000 share range, and really be able to put on a bunch of size, and not just do it, but do it really confidently, and to really follow my game plan and execute on some size. And to really build that, it's been a work in progress to build it up. I've been doing it really slowly, and so I'm really trying to work on building size. And secondly, I've been taking a lot more swing trades. I've been doing a lot of swing trading and holding on to positions for a couple days, and really building out. Trying to really hyper focus on a strategy of holding a trade. If a stock has momentum and the buying and the prints behind it, how can I hold this trade instead of making 75 cents on it? Let's make, $8 to $10 on it over a course of a couple of days, and really hold trades. I've gotten into options again, but more long-term options. I'm buying, options that are anywhere from 3, 6 to 12 months out on some names that I like, and really, getting really hyper focused on the best way to purchase options in terms of understanding the Greeks and interest, and correlating that to the prints of what we learn in day trading and the money flow. Does this stock have the buying to continuously to rise over months and months and months? And then combining that with market knowledge, industry research, and things of that nature. And then lastly, it's just basic, just trying to really dial in on the very fine details of my trading, in terms of, getting quicker in my execution so I can move in and out of a trade, being able to process data quicker, and then trading more than one stock at a time. You know, right now I'm really comfortable with trading 2 stocks at once, but I'd like to be able to, day trade and have 3, 4, open positions at a time, and adding, another stock. Because a lot of times when stuff's moving, it's not just one thing moving. There's 3 or 4 tickers that are moving, and sometimes a lot more. The market's moving, and so I want to capitalize that across multiple names and really be able to become proficient in that.
Nice, right on there. Definitely the size aspect I can relate to. That is a whole challenge within itself with more psychology, because it's not necessarily a methodology basis. When you're sizing up, you got the methodology down. It's just comes down to that self psych. But
yeah, I agree. I think that, once you get past, 5 to 10,000 shares, it's no longer about, you have it down, you know what you're doing, and now you're just learning how to trade that amount.
Right. It almost becomes a different type of, I don't know, like a market at that point when you're trading that much size, having to be able to scale in and scale out, just like market makers do.
Well, whenever you can place an order and you can visually see whenever your order is executed, it has moved the stock, it changes the way you think about stocks, because you start to get to 20, 30,000 shares. There's no room for making stupid mistakes. There's no room for not cutting your losers. There's no reason to not wait for the perfect entry on the trade, because you start trading that kind of size and you start messing up, you will start having 6-figure losses, and you will eat through your account. Unless you have, $40-50 million account, you will burn through stuff really fast. And so you have to be hyper focused and really, dialed into your trading.
So it's better to have those issues of not cutting your losers when you're trading a lot less shares. So when you can fix that issue and have that issue completely dialed in to get to the point where you want to be, where you're trading that many shares.
Yeah, I agree, man. I agree.
So, I mean, it was a good conversation. I definitely wanted to keep it around that 30-minute mark.
Yeah.
So
well, thanks for having me on, man.
Yeah.
I really enjoy everything that you've done. You've been just a huge asset to the team, and it's just been so fun to watch your journey. I mean, you're a professional trader now, and you have the skill set behind it and the mentality, and I'm just looking forward to continue watching